Well, 2024 was a year for the record books for Calgary real estate. Sales dipped slightly from 2023, but nearly 20% higher than the long term trends in the city. This is a testament to Calgary's bustling real estate market. The annual sales tally nearly matched last year's, with gains in higher price homes balancing out supply shortages in the lower price ranges. And we're continuing to see prices on the rise. There were steep price gains in the spring that were followed by stabilization in the latter half of the year. However, annual benchmark prices were up, continuing to reflect Calgary's persistent demand for housing. Detached houses up about 11%, townhomes up 11% as well, but up to 15% in the Northeast and East districts. Condos were up 15%, a low of 11 in the downtown area, to a high of 20% gain in the Northeast, East, and South districts. We're continuing to see the strongest growth in the most affordable areas and quadrants of the city. So, what drove the market? Well, population growth. It continued to fuel this impressive sales activity, but a limited supply of affordable options held back potential highs. And the tide began to turn in the second half of the year as inventory levels really started to build up, especially for higher priced homes. This was boosted by a surge in new rental and home construction activity. And by December, inventory had almost hit 3,000 units, which is high compared to recent activities, but well below historic norms. So, what's next for the Calgary market? Well, supply remains the star of the show as we enter 2025. The interplay between housing types, price ranges, and economic conditions are going to dictate whether Calgary's market retains its upward momentum, which I expect it will, as Calgary remains the most moved to city in Canada. Invest for the long term, and I think you're going to be very happy with the results there. Now, let's take a look at the individual property types and how they performed in December. So we'll take a look at the detached market first. You can see that the sales did peak in the spring period and they've come down ever since. You can also notice that this is within historic norms and sales volumes were actually very consistent with the last 2 years. New listings followed a similar trend, taking a nosedive throughout the fall and into the early winter in Calgary. Sales to new listings again spiked over 100%. This means that there were more sales than new listings hitting the market, which means that inventory is going to start going down. And you see that in the next chart here, where inventory had been building up throughout the summer and ended up peaking at the beginning of the fall back in September and October, and you've seen that come down significantly since. Months of supply had risen from record lows earlier in the year back up to about 2% months of supply. Now, keep in mind, anything under 2 months is considered a seller's market. Anything 2 to 4 months is a balanced market. So the detached market overall is still skewing towards a seller's market. Days on market has increased a little bit. You're just above 40 days, but that came off the record lows of about 18 earlier in spring. That's less than 3 weeks on the market, which is incredibly low for any market and possibly the hottest the Calgary market has ever been. And not surprisingly, this led to price increases in the benchmark price and the average price overall. You can see the benchmark did peak back in the spring and early summertime, and it's kind of been consistent and slowing down a little bit. Exactly what happened in 2022 and 2021 as well. Now, the big question mark is this going to continue the trend of the increases in spring and the winter time, which we have seen for the last 4 years? I think we will, but at a slightly slower rate than we have seen over the last 4 years as well. I think average price will continue to pick up too. I don't think it'll increase significantly because I think you're going to see more sales activity on the lower end of the detached market. The higher end, the more luxury units, there's going to be fewer of those sales. So average prices aren't going to increase significantly, but it's the benchmark price that is by far the more important factor. Now moving to the townhome market, you saw very similar trends. The sales had peaked back in the spring and you've seen that consistently lower. Exactly what we've seen for the last 4 years. Same with new listings taking an absolute nosedive throughout October, November, and December, and sales to new listings, you were up nearly at 100% as well. Inventory, it did start to get a little scary throughout the summertime and into the fall with inventory continuing to build, but you saw a significant reduction in those inventory levels back to kind of the levels that you've seen over the last 4 years. Months of supply coming off of record lows earlier this year, up at above 2%, which again is very, very close to a seller's market and well below the historic trends that you'd seen for the last 5 to 10 years. Days on market, you're at about 40 days, which is a very healthy market. And then going to price. Prices have increased significantly year over year. Townhomes followed that similar price trajectory that detached prices did, rising significantly throughout the winter and early spring market. And then they've slowed down a little bit throughout the summer and the fall. Average prices as well are up, but again, skewed a little bit more by more lower activity in the lower price points. And lastly, condos. You saw record sales of condos throughout the beginning of 2024, and this has dropped quite significantly. New listings as well, you saw record volumes for new listings, which helped contribute to those sales. And then you saw listings drop off a cliff. Same with the townhome, same with the detached, so no surprises there. And sales to new listings, again, approaching that 100% mark where all of the listings that are coming to market are selling. The inventory, you did see significant buildups throughout the year, pretty much doubling throughout the year, but you saw a significant drawback in December. Months of supply, you're up around 3%, which is much more of a balanced market. But anything that you're seeing on the lower end of the price points, those units are moving very, very quickly. You're having more supply coming with purpose-built rentals as well as new condos, which is pushing up the prices and the inventory that's available. The days on market, you're up around 50, which is a little bit less than 2 months. We'll have to see if this comes down at the beginning of 2025 or what happens here, but it's definitely something to watch. And the benchmark prices have increased significantly, in some areas as much as 20%. Affordability is the key in the condo market in Calgary, and it continues to be the main factor that is driving price growth. The average prices have ticked up because of a lot of new inventory that's coming to market, but again, it's the benchmark prices that are the ones to watch. And you definitely saw an increase from 2024. We'll have to see what 2025 has in store for us. So is Calgary still a good market to be investing in? Absolutely. It is still my number one city if you're looking for real estate investment. Prices are still affordable, half the price of Toronto and Vancouver. The cash flow numbers, though, still work. Expect them to be cash flow neutral at closing. And I think prices are going to continue to go up in 2025, although a bit more slowly than you've seen over the last 2 or 3 years. Heading into likely economic headwinds in Ontario, Calgary is absolutely my number one city to be investing in still. So if you want to take advantage of these trends, I have Calgary's top investment opportunities for you. I have complete investment analysis for each project, so reach out to me if you want to talk about the best possible investment options to take advantage of these trends.